Welcome to Pioneer FX. Today is Sunday, the 15th of May. Hope you guys are doing well. Just a quick update with regards to what is up and coming this up and coming week. We've got plenty of high risk data releases, especially on Tuesday. So just bear in mind, we could expect to see volatility rise on Tuesday from, look at this. So from Tuesday, we've got the RBA minutes at 2:30 a.m. We've got the pound at 7 a.m., pound unemployment rate at 7 a.m. We've got EURGBP at 10 a.m. Followed by USD retail sales at 1:30 p.m. And then we've got USD Fed Powell speech at 6 p.m. So there's a lot happening on Tuesday, so just bear in mind. And also for the entire week as well, we've got on Monday, we've got minor news, China unemployment rate, and we've also got the pound monetary policy hearing meeting at 3 p.m. on Monday. So that's something to keep an eye out of. On the 18th, on Wednesday, we've got the yen GDP at 12.50, pound inflation rate at 7 a.m., euro inflation at 10, Canada inflation at 1:30. And then on Thursday, the 19th, we've got Australia unemployment rate at 2:30. So on Thursday, it looks like it's going to be relatively quiet during the day. So apart from that, looking at what I can see here for the entire week, actually, we've got a lot of high risk data releases. So we could potentially have some minor fundamental shifts. On the 20th of May, on Friday, we've got the pound consumer confidence at 12 a.m. Japanese yen inflation at 12:30 a.m. And then we've got the pound retail sales at 7. So just to bear that one in mind, I'm still expecting to see volatility rise. Now let's just have a look at volatility for starters. So here we've got the volatility COT positions. Let me just pull it up 1 second. So the CFTC report, COT report here, we can see that commercial hedgers have started to reduce their contracts significantly. Large speculators looking to go long. And have a look at what the retail traders are doing, the small speculators. They've started to go short extensively, like a major drop. So they're looking at this, they're looking left. The reason why they were going short, let's just have a look where they increased their shorts, which was around here. So they increased their shorts significantly and even further up here. So they're obviously looking left. Let me get my horizontal tool out. That's if I can do it on this. They are obviously looking left. And they can see that resistance here. Okay, so most of their stop losses is about here. It's hovering around here somewhere. And that is just around 40, between 40 and 50. So expecting to see volatility come up to this area over here. So still expecting to see volatility rise towards 40 or 50 before we start to see a drop. So just bear that one in mind. And also note, we've got a lot of high risk data releases. We've also still got Russia, Ukraine in mind. There's a lot going on. There's a lot going on around the world. So we could potentially see volatility push up. Let's just go into trading view to cross-check this. So we'll start off with the daily time frame. Clear this out. So we've got spike, spike, spike. Notice how volatility has been on the rise here most of the time. We hardly had volatility come down throughout this year, actually. It's been mainly on the upside. Plenty of retail traders making plenty of pips during the day, which is great to see. Resistance here, we can see resistance, resistance, resistance around this area over here. And then we've got support sitting roughly around there. So that's that on the daily. You can probably stick a trend line here. So expected to see this trend line to be broken. It's making like a wedge formation, waiting for a major breakout, but I could see it push higher. Definitely. Look at that. Plenty of resistance, plenty of traders. Also looking left, looking left, looking left. So expecting to see a target of 40 for the volatility index. 40, between 40 and 45. 40, 45, 50 would be ideal. So that's our target. So the further we see volatility push down, expecting for a push higher towards these territories. If we do get a retracement, if we do see it push down just below 15, this will be a perfect opportunity actually to buy the VIX. You could potentially add some small lot size. You could potentially open a position here because we could potentially see an imminent shift higher, or to be on the safe side, you can wait for that retracement before volatility pushing back up again. But most of the time, notice, most of the time it's been on the upside this year. So that's that one in mind in terms of volatility. We've looked at that in great detail. So let's just go back to our fundamentals again once more. So looking at our fundamental ranking here, the yen is most favored. Reason being is because we can see volatility rising, and also not only that, our future bias looking at the CFTC report is basically long. So that's long. The dollar is also long. With regards to Australia, yes, fundamentally is potentially bullish, extremely bullish, around 34. However, the large speculators are selling this extensively. So still looking for shorts for Australia. For the pound as well, still looking for shorts. Euro, they have actually shifted euro. We're going to look into euro. Euro is one that I'm looking into right now. We're going to look into euro shortly. It is weak, looking at it from the fundamental perspective, but large speculators have shifted. They've started to go long for some weird reason. So we need to look into this into further detail as to why they're looking to go long. Canada, I do favor Canada short. So that's great. Fundamentally, it's in line with our fundamentals, which is great. The yen is in line with our fundamentals. So CAD yen could be a potential one for this week, but we'll look into that. We could also look into USD CAD this week as well. Australia, they are short, but do not, it's not in line with the fundamental ranking, but we're looking to potentially looking for shorts for that one, followed by the pound. But euro, we need to look into that, the reason as to why they started to go long. So let's just go back to the chart again once more. Let's have a look at the euro. This is interesting now. Retail traders are around 59.24% long for euro. Large speculators are 52% long, and commercial hedgers are 47% long. So you can see here that the commercials, they have added 11,000 contracts on the short end, and also on the long side, large speculators have added 19,000 contracts. So overall, they're looking to go up. They've actually significantly pushed it up. You can see here, if I zoom right in, you can see that major shift up. So that's a major increase there. Large speculators and also hedge funds have started to go short. So we could potentially see some euro strength kicking in. Euro strength. I think this is off the back of them potentially raising interest rates. So the big boys started to go long euro. So we could see some euro strength this week. So we'll look into that as well. That's a major increase, actually. Let's have a look at it from the hindsight. Yeah, major shift. So we could potentially see some euro strength there. Australia, still on the short end. So we're going to maintain that short position for Australia, for Aussie. Same as last week. Pound is interesting. Pound retail traders 64% short, and yet large speculators are further decreasing. They're basically short, extremely short here. So could we see a turnaround potentially this week? Well, I'm still maintaining my short position for the pound. Yes, the recession is within the loom. There is what is it? There was ongoing talks with regards to Mr. Boris. He's on his way to Abu Dhabi because of one of the sheikhs passed away in Abu Dhabi. There was something I was looking at through YouTube. I just wanted to go through it again. We do know that we do have some pound inflation, released this week. So that's going to be a key one to keep an eye out of, especially on the 18th of May, as well as on Monday. We've got the monetary policy meeting. So that's something to keep an eye out of. I will keep you guys obviously updated as to what is the outcome from that meeting. So due to obviously inflation squeeze, it brings a fear of recession within the UK. So hence the reason why retail traders were extremely short. So we could see a drastic fall even further down for the pound due to basically the inflation rates increasing further and further and further. Not only that, Mr. Boris Johnson is actually planning to cut 90,000 government roles, basically. So that's going to potentially have a squeeze on the pound. They're obviously trying to reduce wages. So what does that mean? If they reduce wages, that means spending is going to go down. And if spending goes down, then obviously the economy is in trouble. So things are not looking good for the pound. So still maintaining that short position for the pound. Canada, let's have a look at Canada. Canada's still going down. You can see here the large speculators have pushed even further down now. So still maintaining that short for Canada. Euro, we just spoke about this, starting to look for longs now for euro. The yen is a tricky one here that I'm seeing. Since we do know volatility is bound to push higher, yet large speculators are overall net short. They're net short. But do notice this. Do notice something. Yes, and commercial hedges, they're obviously long. So we could see the yen dropping down. However, do note, let's have a look at what retail traders are doing. They're overall net short. See that retail trade is 64% short. So there could be a turnaround here because there was a major drop here once we started to see the yen increase, and now they're starting to paint a false picture here. So we could potentially see, and not only that, fundamentally speaking, the yen is pretty strong. Inflation's pretty on point. The data is not so bad. So, and also volatility pushing up. We could see the yen push higher. I don't believe in this data here that I can currently see right now, but yeah, that's that one with regards to the yen. Swiss franc. For Swiss franc, they start to drop their long position, hedges position. So we could potentially see Swiss franc push higher, even though large speculators are overall net short. Retail traders are also 73% short. So long term, yes, Swiss franc is long. However, short term, we could see the Swiss franc push down lower. But do note, guys, it's similar to the yen as well. Volatility pushing up, so we could potentially see the safe haven push up for Swiss franc. Dollar. So this is interesting now because we just had a look at the dollar just before we started this meeting, actually. The dollar, they're still maintaining that long portfolio. They're still looking to go long. Retail traders are long, hedges are short. Let's have a look at retail traders. They're also extremely long, 66% long. Yes, the data looks pretty good. However, it just keeps overheating the inflation. So let's just have a look at this in detail now. So you can see here, large speculators have been long since around 92.90. So we could see in the future 90 being a target for, or just below that, 85 is a target for the dollar. Around 80, between 85 and 90 is the long-term target for the dollar. We could see it push down as low as that. How imminent is it? I don't know. If we do see volatility push higher, we could potentially see the dollar drop. However, they've been pushing it up higher and higher, trying to gauge or trap a lot of investors to go long. However, that recession is coming. It is coming. We don't know when, but to me, it looks like it's going to be really soon. The moment they start to give up their contracts, it's game over. It's going to be game over for the pound. They slowly started to give up their contracts here. However, we didn't see the dollar drop. We only saw it rise. So I feel like this is all a trap move waiting to play out. So just keep that one in mind. We're looking to the DXY now. Let's have a look at the DX. Hence the reason why I'm not looking to trade any, well, in terms of the dollar, yes, we are long in the interim. However, long term, let's have a look at the DX because we are long in the interim. However, they've been pushing it up like crazy though. Look at this. Volatility rose and it wiped out a lot of traders that were going short, that were short in this area over here because they saw that pullback. I mean, how high can it go now? There's nothing. Let's have a look at it from the weekly perspective. Okay, so from the weekly now, $109. I would say the furthest it can come up to is around 120. It has broken this key level here. Since the start of last year, it's been rising, and we didn't have a retracement whatsoever. Almost every other year since 1998, like you can see here, it was pushing up, triple top, and it pushed all the way down. So we're expecting the similar sort of thing. Yes, in the interim, we are long, but how high could it go? How high could it go before it drops? And if it does drop, we could see it come down as low as 90, and even below that, looking at the weekly, we could see it come down to at least 84 to wipe out the buyers here. Now they've started to short, so we could see it come up as at least 108 potentially before the major drop, or 120 before that major drop. So that's that, looking at it from a long-term perspective. Let's have a look at it for this weekly, intra-week perspective now. So intra-week, we'll get rid of that. Get rid of this. We'll leave that one in there. Daily just there, that looks perfect. Trading is art, is very artistic. You need to take your time with it. You need to really look into the spikes, look into the highs and the lows, where they're looking to take it. Trend lines plays a major part. You see that 0.1, 0.2 retest, broke through, bam, right the way up. Right, so you can see here, major impulsive wave now. Okay, so now we've got our dailies all marked up, weekly marked up, because it's just been pushing high and high. Obviously, we're looking left, we can't see any data from the 4 hourly now. Let's just look at this in greater detail here now. Consolidation, stop hunt low, rise. This was the head, left shoulder, right shoulder, boom, rise. Consolidation, stop hunt low, second rise. Consolidation, stop hunt low, third rise. And now this is consolidation, and could this be the fourth rise? Hold on, let's have a look at this. First rise. Second rise. It's usually 3 to 4 rises before it drops. Third rise. We could have a fourth rise here before it starts melting again. Let's go into further detail now. Refine our artwork. So we're on the third rise, potential four rises now for the dollar. I don't see it pushing higher than that on the weekly perspective. Yes, we do know, looking at the CFTC data, they're still looking to go long. Right, let's refine this now. So from here now, all we're doing is we're looking for volumes. Where is the greatest volume? And how good does it fit with our that's a good fit there. Label that as blue, 99.6. $100.7. Pushed up, pushed up, pushed up, pushed up. Then you start to see volume retracing, volume retracing. So this is all consolidation phase right now. Volume right there. And it's broken out. This, you see this consolidated. If you had drawn this range here, you can see that volume pushed right the way up. It could come for that retest. So what we could see is push back down into this breakout. Yeah, from here, we could see it come up for that fourth rise, potentially towards 109. If this level here breaks, and it breaks this consolidated region, so you can see from this inner trend line here now, 0.1, 0.2, we're waiting for that third touch. Wait for that third touch. If it breaks this trend line and it goes back into this consolidated box, then that means, and it breaks this volume spike, 103.654, then obviously wait for a major break below here. Retest, you can see it come down. And if that breaks, we can see it push down even lower. However, I do favor the long side. The long side it is. However, there is plenty of liquidity to grab at the bottom. So how far can it go down? It can go down as far as 80 long term, or even below that, as mentioned earlier. However, in the interim, looking at it from what the large institutions are currently doing, they're looking to raise this one even higher. So yeah, sorry about that. I just got cut off there. So as mentioned earlier, we could see a rise for the dollar. However, if it does break this consolidated area, we could see it potentially push down. But for now, we're still looking for longs. AUDJPY is something that I'm looking into right now. Looking at this from a four-hour perspective now, I just like to focus on price action, you know, which is key, as well as obviously knowing what our bias is. Our bias is short. We're looking for 85 to be our target. It's currently above daily support and 4-hour. We could see a buy trap here. Obviously, traders are looking left. They see that this area has been reacted into. So they're potentially looking for longs for AUDJPY to push higher. However, wait for this third touch. 1, 2, could there be a third touch of this trend line? If we do get that third touch, I will keep you guys posted. But for now, I'm targeting 85 for this week. Push here, drop down. Let's put in our liquidity areas. Okay, that's a good area. We could see it potentially play around between this area and this area here. If we do get another spike, game over. Retrace, then bam. Let me get rid of these 4-hour buy traps. I'll leave that one in. I'll get rid of this daily support because it's not doing much. But yeah, this one looks good. This one looks very good. In terms of psychological stop losses or even physical stop losses, because volatility is going to push up even higher. So anything could happen in the market. So we do need to obviously be careful of that. I would suggest you place it above that 97 is good. It's a decent area to place your stops. Yeah, so definitely targeting around 500 pips again this week for AUDJPY. We could have an immediate shift down or a retracement higher from these high levels we're looking to go lower. Let's have a look at which other one we were looking at? CAD yen. CAD yen is the one we were favoring the most, potentially through to this week. It's rejected from last week's key bank levels. Could we see it potentially fall from here? That could be a possibility. Let me just get rid of all of these lines, start fresh, CAD yen. You could see here from the weekly, massive push down. And then on Friday, Thursday, Friday, started pushing back up. But you can see now, just looking at price action from the weekly, that the body of this candle has broken 3 weeks of rise. So that looks bearish to me. However, bullish in the eyes of technical traders, because on the weekly, look at that massive pin bar. So they're thinking buy, we're thinking sell. Daily, you can start to see that price has started to retrace slightly, slow down, M formation right there. So it's looking good. 4 hourly now. Right, so we're focusing on key areas, key zones. You can see that the last 4 hour candle here shifted right the way up. So we could potentially see it possibly coming down to this area here, then break through. Plenty of liquidity to be grabbed below. So long term, we're looking for shorts. How many pips is that? Around 400, which is reasonable. Let's look for another key level. just there. And if this level here, 97 breaks, then it's game over. 90, we could see, these are our targets, guys. These are our targets. These blue lines here, our targets for this week. In terms of stops, obviously as safe as possible. Above the 113, 104. We could even see it. This could actually blow to the sky and then obviously take as much liquidity as possible, because you can see here plenty of evening star formations, yeah? Evening star formation, evening star formation, evening star formation, drop through. So what do you think price is going to do? To wipe them out, hit their stops, boom. So that could be a possibility as well. That could be a possibility for sure. So I suggest you place this, just to be on the safe side. 105 is a safe spot to put it, because there's liquidity up here as well. But there's more liquidity below than there is above, so most likely bound to push down more aggressively. CAD yen, you going down. All right, let's have a look at EURNZD. We mentioned euro bound to increase. So looking at this from a 4-hourly perspective now, we could potentially see a drop down. Whoops. You can see here on the last this 4-hourly candle here on Friday, it broke through this area here. So we could potentially see it dropping as low as 1.63886 before pushing up, targeting this as our targets, 1.709. Or if we do get a break below that, then we'll look for areas of entries. But definitely targeting 1.7 is reasonable. 1.7 is a reasonable place to look for our take profit targets for this week. Let me just zoom out. Right, so we can see here now the reason why we're looking for 1.7 or 1.70955, which is a better suit actually. We'll put that psychological figure there of 1.7 as our TP1. But obviously focusing on price action. If this trend line breaks, we could see EURNZD come down as much as 1.6 perhaps. If this long-term trend line breaks, that is. Oops. What is going on here? The chart's gone absolutely ballistic. Let me get rid of these arrows because it does get confusing. You could see an imminent shift up. We could see if we see a retracement from these blue profile areas, liquidity areas. Those are our targets. In terms of psychologicals now, double top, rise, consolidation, rise. So this was our last sort of, I would say, best place to put it. just below the 113 here. But looking at EURNZD, look at that. Plenty of liquidity here to grab. So could be an imminent shift up for EURNZD. Euro AUD, similar sort of scenario to Euro and ZD. You can see here plenty of liquidity to grab from these highs. We are targeting. Look how slow this Euro AUD dropped. Slow move down. Currently consolidated at this moment in time. Boom. Stops will be ideal to place them there. Looking to ride this one up this week. How many pips is that? Roughly well over 1,000 for this one. Yeah, reasonable. Euro AUD, EURCAD. EURCAD looks really good actually. Retraced nicely last week. You see that plenty of room for it to go up. EURCAD currently consolidated at these lows here. So all we're doing right now is focusing on price action. There could be liquidity here, down here to be grabbed. For this week, we could see it ping up straight away. If that breaks 1.4, if 1.4 breaks 1.42, we could see liquidity being grabbed here first before the rise. How many pips is that? Yeah, around 90 pips. So just below that, so 1.32 is a good area to place your stops. And that's our target for EURCAD. Euro pound, this is an interesting one. Euro pound, like you can see here, it's been heavily consolidated since the start of this year, actually. Not much of a mover, accumulation, distribution. Now you can see that this long-term trend line has been broken. It's coming down to retest it. So what to expect now from these levels? Euro pound, we could see an imminent shift up now. Get rid of these arrows. We could see an imminent shift up. That's a beautiful area to look for. Your take profit target. Or we could see it push down as low as 0.844 to target that. and your psychological stops. You can see accumulation, distribution, accumulation, distribution. So safe place to put it will be around here. That looks reasonable. Euro Swiss franc. Expecting for this one to retrace, actually, to come down to these levels here before pushing higher. Again, similar to EURCAD, EURAUD, accumulation distribution phase. Plenty of liquidity to be grabbed from these highs. You need to take time with these charts. Target upside. Two targets for this week. And if this level breaks, it's going to be an aggressive shift up. Yeah. In terms of stops, place to put it is just there. Yep, that looks reasonable now. Let's just focus on the price a bit more from where we are at the moment. Yeah, that looks much better now. Could we get a third touch of the trend line, perhaps? Get rid of this line here. Okay, so now looking at this inner trend line, 0.1, 0.2, this is the third touch of the inner trend line. So we'll highlight this area. We'll box it out, actually. If this breaks out, we're all clear to go up to 1.06. This inner trend line, really important. Yeah. Let's move on. New Zealand yen. This one's just been melting from the highs. Let me get rid of these lines. Look for areas of entries now. Okay, so now we can see a buy trap here. a buy trap here in this area. Traders are looking left again. Could see that level being broken anytime soon. That could be our target for this week. Yep. Stops would be ideal to place them here. No, actually, no, because it could actually come up to these levels here. Just there would be ideal. $76.9 target for this week. Reasonable target. From price is about 400 pips. There's a lot of pairs we're going through this week. This one dropped down quite significantly, actually. Let's have a look at pound yen. So pound yen has reacted to this level here. Retail traders are obviously looking left. It's similar to AJ again. So what to expect is targeting this area over here. We could see price push higher towards this area. If we do see a rejection, then we're looking for shorts, of course. And if it does reject even higher, we're looking to short this one. It could potentially spike right the way up through this area here as well. So do bear that one in mind because there is liquidity there. It could just do a mad, like, could just go crazy, you know, up and down, probably, but because of news or some form of something of that nature would potentially shift it up, and also with volatility pushing up. So if that one breaks, we're looking to target $152 as well. So pound definitely short, yen long, so we could see this one melt down this week. Reasonable. Do mark these blue levels off on your charts as well. 166.946, 160, 159.9, and our targets. Do mark them off. I'm going to send this through Telegram anyway, so you will have a copy of this. Let's have a look at the dollar, and then we'll have a look at, we've already had a look at the dollar actually. I've mentioned two things here. We're targeting 109. That is our target. All right. However, it could go either way because it's just been pushing higher and higher and higher. It could potentially go the other way. Even this week it could. So do keep a close watch on this consolidated box, consolidated range. Inner trend line, 0.1, 0.2. Do keep in mind the third touch of this inner trend line. Then we can push higher. If it breaks that and goes back into the range, you could see it consolidating. If it does break out of the range, wait for the breakout, retest, and then we could target 99.6. Let's have a look at gold before we finish up. Now, gold pushed down from last week, as mentioned. We could potentially see a retracement, which we didn't get it. Continue to melt down. Now, let's see what targets we have for this week. For this week, we have pretty consolidated here because it's quite difficult. There we are, that one there. 4 hourly now, still focusing on price. That's a better fit. So we could see 1792. Yeah, 1792 is the bare minimum because you could see spikes there, spikes there, spikes there, spikes there, resets, plenty of resets. So 1792, I could say, is the rock bottom for gold. If it does go below that, 1700 will be the next area to look for potential longs. However, still targeting shorts for gold for this week as well. So what we need to do is gear up for it. If we do get that retracement higher, all well and good. We do get retracement 1852. We're riding this bad boy down. If it pushes even higher and breaks above 1852, and we do get a decent spike, then we could see 1792. So we're targeting this. This is our target for this upcoming week. In terms of stops, I would recommend you placing them. Now you see with gold, it's very, very liquid. It could easily spike right the way up off of news or something like that and wipe out a lot of traders going long, going short before making the real move short. So just need to be careful with gold, really. Very, very volatile. That is our reasonable setup for this week. I could see it easily coming down to 1792, and then from here, it could rocket right the way up. But just like how we are thinking, most retail traders, they're looking left. They're buying this. They're definitely looking left, and they are buying gold. They're going to be buying here. So what do you think is going to happen here? It might go down to 1792, retrace, and then bam, down as low as 1750 or 1740. That could be another one. So we could see an imminent push down low from here. From current price, we could see an imminent push down low. Let me get rid of the arrows. So I'm just giving you my potential scenarios. So what is most likely bound to happen? 1792, retrace back up. And then bam, 1750. $17.50 as discussed. A lot of buyers in this area. We looked at it earlier on. Plenty of buyers down here. Let's just double check. Let's just double check. Oof, 75% long. Buyers are screaming. Let's have a look at hot base. Yeah, definitely a lot of buyers in this area. They've almost increased, like double. So they're looking at that 1800 level and they're placing their pending orders there perhaps. We could see 1750 as the next area of take profit. Get rid of that. That's a trap. We could see 1765. 1765 as the second take profit, sorry, and then from there we could see 1750. Yeah, 1750. So 3 targets for gold there. That's if we do get a decent retracement higher. We start looking for shorts from those highs. Any questions before I finish up? Any questions? There's a lot of trade setups that we went through for this week. I will post them through Telegram, clean them up, and obviously put screenshot them and send them through. Any questions? Well, I hope you guys have a pleasant week. Again, just be careful. Volatility is most likely bound to be on the rise. Plenty of pips to be made in the market, stock market, most of them all down. Currencies now, we could potentially start to make the most of currencies as well. Thanks very much. We'll catch up again on Wednesday. Thank you.